not experiment, but just stick to one rule. What would be the rule? Either one, follow the position size calculator, or two, just put 3 micro, 3 minis, 3 normal standard lots, or whatever you choose to put in, but it has to be consistent per each. Questions?
Yeah.
Challenges? Input?
No, I don't have any questions. It's
No,
like
I don't know.
when I, yeah, for me I use position size, so, you know, of course sometimes the spread, the distance between the stop and the entry is quite far, and the position is quite small, so I have to consider that as well. But yeah, just use position size for my positions.
Okay. JP?
Yeah, what you described was me. Like I won on €105 in the first trade. The next trade, I went gun ho, smacked. For very little ones for the next four, except for the euro. I didn't do the euro. I did the pounds instead. Didn't take the plus 150, so that's another thing. So I let that 150 go to zero and then the minus. And then that minus 68 went gun ho again. Lost on that one. Got the next two, the pound and the New Zealand dollar. Got the New Zealand dollar there, 34. Went gun ho, got 90 pips, got smacked again. Didn't do the euro, I don't think. And then went gun ho on the pound yen, got smacked again. So everything I went gun ho was the lost one.
Yeah. All right. So at least now, we are aware of, where the issue is for January. So what we're gonna do now for February is to create some form of rule-based. Okay. So sweet, excellent. Okay. That's pretty easy, easy peasy. Yeah. Sometimes we get overconfident, we get smacked. The beauty about trading, bloody markets. Okay. So what other challenges do you guys face in January?
Oh, mine, I had a list. I actually created a Word document which I also passed on to JP about areas I need to improve on. And I had about, how many did I have, JP? About 6 areas, so 7 areas. So one was taking action sooner. Like sometimes when you had a loss, you just look at the screen and then you don't take action sooner. So that's one that that I've got. Another one is correctly placing the fib retracement at the correct time frame. And another one is also I place a rule for myself to add or enter a trade always after a major report, because I got smacked with the pound-dollar trade by adding in not in the direction of my trade. So like always average with the direction of my trade, not when it's going against me. So that's one as well. And then the stop loss, my rule now is just to set the stop loss at the last swing, or swing low or swing high. And I have to stay firm. So not to move the stop, just accept it, and then if it takes it, then move on to the next trade. And then learn to reverse the losing position and go with the direction of the trend. Like the example that I had there was the euro yen, where we were short and then it went to the upside. Instead of me taking action to reverse, actually just didn't take any action. Just got I don't know, what's the word for it? I froze and then didn't take action. But what I did, another one is learn to limit the loss when the trend lines are violated. Also the example of the euro yen as well. I saw that, but also didn't take any action. But what I learned is after learning about that, it's just I took action with a pound yen. So I guess I've learned something from my learnings in January. So, and I'm now reading this every day, just to remind to myself that this is what I need to improve on.
All right, nice. How about yourself, JP?
Yeah, I've got to keep the position size consistent. That's an obvious one. As much as I'm in desperation to make some pips or money or to try and get it back to break even, I've got to. It's like an aeroplane. You know, I've got to not do anything crazy. Just try and land it as slow as possible. You know, don't go too fast or I'll crash it. Taking profits, I mean, there was that example about the 150 pips for the pound and I didn't close it. So I lost the 150 and then I took the stock with that big drop that news that we're all aware of. So that was another one that I need to really focus on. And just taking all the trades, you know, I'm second guessing trades. The Euro yen was one that comes to mind. So, but also on your list you had Euro yen, I think it was, going on. I mean, we didn't know how to do that, or we didn't do that. We let the stock take on the long, on the short, and we didn't get in to go on the long side. So that's something we have to change as well for February to get in for the trend rather than just running the swing and let it get stock taken.
All right, nice. Excellent. What else?
Just be aware of my emotions. I mean, I find it's a finite line between intuition and micromanaging, so just be aware of what's going on when I'm touching an account or going to touch it. I mean, if I keep the risk low, have the stop set and the target set, so nothing else should be a problem this time.
Okay. All right. Cool. Anything else? I think that's pretty much, you guys covered everything pretty much, right?
Yeah.
Okay.
Yeah.
Beautiful. All right, let's talk about being frozen. What causes in order for a person to freeze?
Fear.
Nice. Fear. Fear of what?
Losing.
Fear of losing. And where does the fear of losing come from?
Past losses.
Past losses. What else?
Beliefs. Upbringing.
Beliefs.
Experiences.
So everything once again, right, in terms of the belief. Like, at the same time, we freeze when it's hurtful. You don't know how to react. It's not fast enough in terms of the reaction. But lucky with the things that we do, time is always to be on our side, so we have time to react. So how can we be able now? Let's take that as an example. You guys said, okay, when that happens, I'm going to reverse to the upside. So what processes then can you implement in order for that to happen? All right, let's I'll pass basically because you have your your Microsoft Word with you, JP. So let's look at the processes on how to achieve it basically from now till the future. So let's talk about taking action sooner. So how can you take action sooner?
Taking action sooner, well, we've got to have maybe a set entry limit mechanical, so there's no thinking involved, or
Okay,
just
good.
putting one small lot just to be in the game. I mean, sometimes I find it's a very small position. You tend to go in quicker than a larger position.
Gotcha. What else?
Having a definitive plan.
Having a definitive plan. Nice. So in other words, putting in your plan, in your notes, that if it goes and surpasses a certain point, then it's gonna go long. By putting a mechanical order or looking at the price there and then and basically whack it in, right? In order to avoid the emotion of freezing, what would be a much better bet then? Like in terms of what action would you be able to do so it'll just be there automatically?
What emotion
Yeah, like in order to avoid the emotion of fear, as part of the plan, what would be a much better bet? Like, in order for you not to, what's the word I'm looking for? To embrace or face fear, like, or the market itself. Because sometimes when you're looking at it, that's where people freeze because they don't know what to do. So you will be able to do something without even looking at the marketplace. And what would that be?
Not so sure.
How
So
about
you're
you?
saying, so what are you saying? Don't look at the charts
Are you
itself.
asking me?
Yeah, this is for both of you today, right?
So what are you saying? Don't look at the chart at all.
I mean, you can look at the chart, right? This is part of your definitive plan.
Yep.
So now, let's go back. Say you have the chart in front of you. You have, yeah, you have everything in front of you right there.
Yep.
So say, for example, where's that? The euro yen, or even for the pound yen, for example. So the euro yen basically didn't even go to where we wanted to go, and then it reversed out of nowhere.
Yeah.
When prices were sometimes way too fast, or if not, in actual fact, I think where we entered, there was some room for everybody to basically help out, right? So what rules can you set, or what process can you set in order for you to close your position or enter once the stop basically gets taken? Because there's a lot of, look at that, there's a lot of time.
You'd have to set double. I mean, if you had two positions, you'd have to have closed 4 positions. So that would effectively go along the other 2.
Alright, great, so that's one. So in other words, putting a mechanical order in place. So a mechanical order that if you get taken out, nice clear breakout with the level of supply, then you have something set in stone without even you looking at it. Because what emotions or what thoughts normally happens when, say for example, it surpasses the level of supply and then the price starts to drop again?
You want to get a better price.
Want to get a better price, and in other words, when you think if you want to get a better price, what is that word?
Greed.
Okay, greed. What else?
You are hoping.
Hoping. Nice.
Hope.
Yeah, the hope, right? Hopium is a dangerous drug in trading. So say for example right there, now you're going to create a definitive rule-based system basically what you're doing. So say for example, okay, it's an if and then statement. If the downtrend line breaks, then X, this is what you're going to do. Either you buy or you don't do anything. But if you choose to buy, then you know where to go. So if you're going to buy, then at least we're on the breakout of the downtrend, then the risk is actually pretty low and the probability of you winning is highly probable. Now, the other part is that if I choose that the stop loss will be at 122.88, and if it breaks 122.28, then I'm going to double my position size in order for it to go to the upside. Then also the stop loss will be put in place as well. Now sometimes when we're trading manually, when you're in front of the computer, this is where a lot of thoughts will come in place, the what ifs. What if the price will come back down? What if the price will, what if I will be able to get a better price? What if it drops? Then I will wait. And then you're hoping, and all of a sudden your hope didn't happen. And then regret happens. So it's pretty much like a vicious cycle, and like a spiral movement from a positive and all of a sudden to negative, and then you're saying, you idiot, can't believe I did that, did this, right? So all the negative emotions will come in place once again. Right. Whilst we've got you then, I want you to write down your certain rules now for you based on that. So I'll give you guys a couple minutes, and I want you to write specific rule-based, and then, even pretty much you just scribble it, just nice and quickly, and then you can do it later on, make it nice and neat where you can actually see it.
I'm done, Ray.
Alright, cool. Let me know when you're ready, Anne.
Yeah, I'm done.
Okay, nice. What is number 2? Let's start from you, Anne.
Number 2 was placing the fib correctly at the time frame. You've spotted the pattern or the method, and exiting to limit the loss if it didn't go to the right direction.
Okay, so let's create some certain processes for that one. What will be the actual process then in order to place correctly the fib retracement at the correct time frame?
Just draw the fib directly on the time frame.
The fib must be drawn on the chart. The method or pattern has been spotted. Okay, cool. Alright, so please write down, please, just a specific instruction or process in order for that to happen. Likewise for you then,
Yeah.
Harry.
Yeah, sure. Done. Looking at number 3 now.
Sorry. Let's look at number 3. Add or enter a trade always after a major report. Does it have to be always? Or only when you choose to? So what would it be? Because if always, but what if you're not going to be there on a good major report?
Just on this point, you don't do that, right? I've seen you enter before a major report and after. So what's the rules on this? What's the caveat on major reports? And define major report.
Well, my rule is that if it's a good report or like, like say the GDP or whatever, if I'm in there, then I'll do it. But my major rule mainly is that if I have a trade, and say for example, take the pound yen or the pound dollar. Say the pound dollar for example. If I'm swing trading that, and I know that there's going to be like a GDP or Governor King will speak, or the ECB is going to have a bit of a reporting, then I'm going to make sure that my stop is not going to be too tight. That's my rule. Then making sure that there's some form of room base. Now, sometimes, like, it's already predetermined anyway what they're gonna do. They're just so predictable sometimes, like especially if it's for the past few bars or few days, it's on a downtrend and they're just pushing it through, and then a report is gonna happen. The odds and probability that we'll keep on pushing it to the downside is highly probable, right? Unless there's a quick change, obviously. But 80 to 90% of the time, that would happen. So say for example today Aussie USD was a really good example. The market was just so bad that how come the Aussie didn't drop, right? And out of nowhere you can see that yeah, it went to 0450. It is pretty slim, and there's going to be a reporting basically in Australia. And what did it do? Basically when the report came, boom, it basically tanked, right? There's 1, 2, 3 hours ago. I don't know if that was the time when it tanked, but you can tell that whatever happens, regardless whether it's sometimes a good report or bad report, but if the market is already telling you that yeah, there's going to be a lot of weakness, that's where the anticipation and the intuitive sometimes will occur, and you can just feel it. Obviously, it's something that I won't be able to teach you guys, but you guys, everybody has it. You can just feel it when the market is just about to either go to the upside or go to the downside.
I think with this trade, we were going against it because we already knew, or I already knew, that sellers in control, lower lows, lower highs happening here. However, I still was adding, but to the wrong direction as well, and then adding before, even like anticipating that the report was going to be good, because I think I added just before this drop here.
Yeah.
Simply because the low was higher here compared to that, and I was already anticipating, oh, it's going to be a good report, so I'm just going to add. So that's why I put a rule here to say that, okay, well, really, I should really look at what the chart is telling me.
Gotcha.
The chart is already telling me sellers in control. The report could be bad. But I already anticipated that it's not going to be, because of my belief that it may not be a bad report, since it's a very good demand level as well. So.
Okay, let's talk about anticipation, speculation. When we anticipate something or we speculate something, what would you be able to do? Or I'll just rephrase that question. Let's first define anticipation. What does anticipation mean to you, Anne, or speculating?
Means guessing the or pushing through your belief that the outcome will be this outcome because it's what I believe it will be the outcome.
Okay, all right. Hold that thought. How about you, JP?
Anticipate. It's about, putting your trade in or taking action to be prepared for a particular outcome or expectation or prediction.
All right, expectation based on what you believe in. When that happens, what is that terminology then? So
It does
if,
happen.
yeah, when we're defining that as in terms of speculation based on what we believe in without any factual evidence,
But
then
hang
what's
on,
that
hang on.
word?
But isn't this...
Assuming,
Okay, once you're assuming, what is also that word?
hoping?
Okay, and when you're hoping, when you go to the casino, that is now considered as
gambling.
But
gambling.
hang on,
Yeah,
hang on. Isn't this game about anticipation rather than reaction?
I
We keep
agree.
buying at the... Yeah, because we're buying at demand, selling at supply before the movement. So we're anticipating a movement.
Yes, now, if you could just remember what Anne basically said. On the
Mm.
upside, because remember in hindsight, everything always looks rosy.
Mm.
So what did Anne basically say, said there? Or what did she say 5 minutes, 10 minutes ago?
She was adding position before a measurement, anticipating that the news report was going to be good.
However, she corrected herself. So can you repeat again, please, Anne, on what you stated when you corrected yourself?
Yeah. Although I already know that.
You said you
Yeah, I already knew that sellers were in control. Already can see it that it's already forming lower highs, lower lows. However, I still wanted to believe because I'm in the instead of being short, I'm in the long position. I wanted it to go long because I'm trying to push what I believe that it's what it should go. So it should. I'm trying to push that it should go into the direction that I want it to go, but it doesn't want to.
That's right. No, that is not a big problem. Like, sometimes it also happens to me, right? When, especially we get overconfident, we're winning, and then now we're basically saying, hey, I'm right. Screw the market. But at the end of the day, who is right?
The
market's
market.
always
The market. So, in other words, now we tend not to see certain things anymore. We get blinded by it. Now, in hindsight, if we really look into it, we can see that sellers are in control, create new lower lows, still pretty much on the shorter term downtrend, and there's more room in order for the price to go to 158.34 or whatnot, right? And that's why if we push our inner beliefs and we're speculating, yes, the market is about speculation, but remember, when we have to speculate, we need to have enough evidence on why we're speculating objectively in order to put our trade in there. Hence, it's the advantage of swing trading is that, yes, it gives us time to analyze, to have a look, but once you're day trading, then there's no room for thinking, right? Because the analysis has to be before you execute. So in other words, and this is the danger part about swing trading, is that because it gives us time to think.
Mm.
Now, if we're thinking and we know that we're right because we wanted to believe that we're right, then that's where we get caught. We don't care about the speculation aspect because we know we want to be right. However, but if we're being meticulous and we're like, hang on a second, I know I've been winning, but let me see first, clearly hear what's really what the market is telling me. Now, if we think that way, and by saying, okay, hang on a second, let me drop back 2 steps backwards and let me have a look objectively what the market is doing. Okay, great. it gives me that, it gives me this, gives me this. Then it's giving us enough evidence. Then this is when we execute as part of our speculation. Right? Nice. So listen to what the chart is telling me. Look at what the market is telling you objectively. And then part of that is now listening as well to your intuition. Not because of what you believe in, but because what the market is telling you, and intuitively, based on that, if you are now in sync with the market based on your intuition, this is where we can trade in the zone. You know, that same feeling with the euro, dollar, euro, yen, the first trade of January, what we did. You said, you know, we want more of that. Everything went smoothly is because we look at the market objectively. The market was telling us what we should really do. Now we are in the same wavelength, hence we're in the zone. So I always have a motto that if you can fight them, be with them. Like surfing, even though I haven't surfed before, but looking at big waves, it's scary. If you go against a big wave, you get dipped. But if you go with the wave, it feels good, even if you're doing bodyboarding or boogie boarding.
But just on that point, is that correct what you just said? Why do we swing trade? Why don't we just wait for the swing and then get in at the retracement in line with the trend?
That is method one, right?
Hang on. Both ways. No. Going with the trend rather than going against the trend with the swing, like skipping that trade.
So in other words, even in the downtrend, you are just selling at a lower highs.
Correct.
That is mainly method one.
Yeah, but also we're doing the short. Okay, downtrend. So we're actually going long in anticipation of the lower high.
Counter trends, exactly, because that's still part of swing trading. Hence, you're trading the swing of it, right?
I got you. Yeah.
The
But if you say don't go against the wave, should we eliminate that trading just to go with the trend? More is in our favour.
Technically speaking, that is the best way of trading, and hence we've been basically talking about that for the past X amount of years.
Yeah.
And also saying it to Phil, right? That it's better to go through with the lowest risk that it's in a downtrend, get to the level of supply on a lower high end of things. And if it's an uptrend, buy it on the higher lows, because if it's a level of demand. Now, part of that is that if we are going to anticipate and speculate from a lower high perspective, lower low, or to create a lower high. Now the question here is, what if it doesn't want to create a lower high even though stabilization has been occurred? Because from a stabilization point of view, a correction should follow, but the market only go in three ways. Either it will pause on a sideways movement and go to the upside to correct itself, or will continue to drop. However, this is where part of my ruling basically on method one is that if the stabilization basically will break on that low, then so be it. Then it's going to continue to the downside. Hence, if you really look into it, stabilization, most of the stops are based on the low, and then if it's going to correct itself, then M2 will follow. That's always the case when it comes to the markets. From a down with a good strong bearish bar, doji from stabilization, bullish bar will create a morning star, and then it will correct itself, but it doesn't want to correct itself. It remains stagnant, and it will drop to continue the lower low. And that's what the market, and hence why the market is so predictable. But if it doesn't want to play, then so be it. Then it will be the same way. It goes back to your ruling of number one, that if it breaks the lower low, then close your position and then short it to go to the next one to minimize the loss. See how you would be able to define any type of rule based in your trading, right? But absolutely, the best case scenario in a trading environment is that if it's a downtrend, always sell at a lower high and the level of supply that creates the lower high. In an uptrend, always buy the level of demand that creates the higher low. So, does it make sense?
Oh yeah, it makes sense. But yeah, but we trade both ways. So
Hence, that's
you're
why
right,
we're
we
traders.
correct. I understand that. But I'm just trying to grasp the probabilities and the highest return, lowest risk trading environment. That's all.
Exactly. Alright, sweet. Next, number 4. Number 4 is always average with the direction of my trade. I thought you guys already been doing that anyway, right?
No, we made a mistake with this one here. Well, I did anyway.
That's no longer within the trend, right? So, yeah, okay, that makes it good. So what action step should you take on that?
Same as here. It's just, listen to what the chart is telling me
Yeah,
and find enough evidence and close the position and reverse it. Really, that's the action.
perfect.
Because it's telling me to go to the downside. Why am I still going to the upside when it's telling me shorter? Don't go long.
Exactly.
So that's the action. Yeah.
Awesome. Okay, write it down, please.
Very good secretary, eh? Very good.
Thanks. Anything else?
No.
Alright. Okay, looking at the pound yen. I don't know where Phil is. See something like this, I won't, it is impossible for me to keep track of everybody's. See, now, remember when we said attack 145.60, 135.70? Look at the pound yen. It's now one. I'm sorry, I'm looking at the pound yen. And
Okay,
now
good.
it's down to 145.12.
Nice.
Okay.
145.84 was the entry.
Yeah. So you see you got it at the best price.
I thought that was the entry that we were talking about.
The 145.83 remember earlier? Yeah. No, you got in the good price.
Oh, okay.
But I couldn't get anything anymore because remember when we spoke? I entered on mine, you entered on yours, but I didn't enter with Phil.
Ah.
Because I don't know where he is, right? I think he's
Hamilton Island.
Oh yeah, you're right. He's in Hamilton
Sending
now.
his photos. Yeah.
That's right. Okay, next one. Stop loss must always be set from the last swing, lower swing high. At the trend, always stay firm with the stop loss, except if it's a loss, learn to move on. Excellent. So what action steps can you put in there? Put in mechanical order, no micromanaging the account. And also you have to remember about your emotional flow chart. You have that as well in place. So technically speaking, there's no excuse, right?
Well, really, the first thing is to identify the last swing, low or high. That's the first thing. Then place the stop there.
Perfect. Okay, there you go. Well, the question
That's
is...
basically what the action is.
Yes, and then calculating on how much is the stop, and if you're happy with it, if you say yes, then enter. If not, don't enter.
There you go. Okay. Anything else?
JP, anything else?
Well, you have to. I identify that now because of position sizing as well, and I always put my stops bigger now.
Alright, excellent. Okay, next, learn to reverse the losing position and go with the direction of the trend if trading against it. So similar to your number one, right?
Yeah. Yes, so that's basically, it's nice to look to see a visual as well, so that's why I put the chart there. Just to remind you what happened.
Cool. Alright, learn to limit loss when the trend lines are violated. Learn to limit loss when the trend lines are violated. Cool. So absolutely. Once that's done, what's the easiest action step that you can do?
Close
the trade.
Close the trade. Execute without
just on that point, right? Ian's got clues to look at 4 hour and 1 hour charts. Now, when you're in the trade, do you look at 4 hour or you're just looking at 1 hour?
Well, I always look on my basically on my purpose on the swing on the daily, right? And on the daily, part of the daily will, well, even though the daily is not finished yet, the lower time frames will dictate the strength of the buyers and sellers. So if the strength of the buyers are way too powerful and on the daily is in an uptrend because the bulls are still currently in control, then there's really no room for thinking, you know what to do. The only reason
You don't
why...
look at lower time frames.
No, I look at lower time frames to dictate whether the bulls are in control or pushing it up. Because the bigger time frame, if the bigger time is saying it's an uptrend, and most bigger time frames, like, because when we're analyzing it, you know, we agreed that the weekly is so powerful, the monthly is very powerful, but the monthly is not finished yet. The weekly is so powerful from last week. The daily, you know, there might be a slight correction, but on that correction, it can go to a certain point. But there's a probability that it might not go to the price of where we want it to go. So when it's reaching to a certain point in a smaller time frame, it's dictating that the bulls are in control. Even if oscillators or any type of oscillator is showing overbought, they don't care about the oscillator, right? It's all everything else about price. So when that happens, you just cut your losses and basically go to the next one. But what stops us from pressing the trigger is mainly, once again, about our righteousness, believing and hoping that it's going to go to where we want it to go. But the market doesn't care about us.
Correct.
And simplest action to take is just press the trigger without thinking. Okay, sweet. If you scroll down a little bit more on your word, please, and I will change the I am fearless to I am courageous.
Okay.
Can you go further down, please, on your word?
That's it.
That is it. Perfect.
Yeah.
Very nice.
I'll email this to you, JP.
You're the secretary.
I know.
White with 2, thanks, Ian.
Cool. All right. Any questions then for tonight? Was that helpful?
Yeah, that's very good. No questions. Now it's time just to take the action.
Do you guys have a folder?
Yeah, I do.
How about you, JP? Do you have a folder?
Awesome.
Okay, so yeah, print that out and then whack it into your folder. So
Yeah,
that's
I'm
all
reading
we're gonna
this
do
every
there.
day. So that's my plan. Next 20 days, this is what I'm reading
All
every
right,
day.
cool,
Yeah.
Yeah, it's funny like that, eh?
nice. Okay,
I've
Until
had a
it
lot of
sinks in.
losses. I've had a lot of losses, but this one seemed to have hurt the most last week.
hmm,
I don't know why.
interesting. Then maybe this is the stuff that yeah, it's a calling for you then. All right, sweet. Then we'll go and see you guys on the next one, just in case if someone decides to come in.
Oh, okay.
Okay.
All right.
Right.
If not, then I'll just normally I just like put it straight. All right, guys, have a good one.
Okay.
Bye.